In 2026, a 45-day disruption in the Strait of Hormuz froze global shipping routes. But the physical blockade was only part of the problem. As ships sat idle, the manual paperwork required to verify global trade collapsed under the pressure. For nations relying on strict religious compliance, this delay was catastrophic. The legacy Halal certification system operated on fragmented physical documents and required in-person audits that took weeks to clear. This line chart tracks the immediate financial fallout. Within weeks of the disruption, shipping insurance costs spiked from a baseline of 0.125% to over 10%, blowing out supply chain budgets. Because compliance systems couldn't keep pace with these compressed trade timelines, businesses relying on manual verification cycles were entirely locked out of fast-moving trade channels. An operational lag turned into a direct loss of revenue. In a trade environment measured in hours, manual verification is structurally obsolete. Compliance must become a condition for execution rather than a delayed observation. This realization triggered the Gulf Cooperation Council's transition toward a programmable halal economy. Instead of relying on human institutions to promise religious compliance, those rules are now written directly into the digital infrastructure of the trade itself. This visualization shows how that functions. Physical data from real-world testing labs and certifiers feeds directly into a digital bridge known as a Sharia Oracle, which then flows into a smart contract, a self-executing line of code serving as an automated escrow. The code demands two simultaneous green lights. It needs commercial confirmation, like a delivery receipt, and religious confirmation from the Sharia Oracle. If either signal fails, the transaction freezes immediately. By executing ownership transfer and payment at the exact same moment, the gap between verifying a product and paying for it is erased. The code enforces the contract, removing counterparty risk and the need for human intermediaries. To see this applied in the physical world, look at the highly complex global meat supply chain, where tracing a product's origin across borders has historically been slow and error-prone. This bar chart compares the speed of the two systems. The legacy documentation process often took up to 7 days to trace a single shipment. The new blockchain-integrated sensors reduce that verification timeline to under 30 minutes. Producers operating on these instant digital tracks are commanding price premiums between 15% and 30% in international markets, driven by higher buyer confidence and faster verification. But those instantaneous smart contracts require a settlement layer that moves just as fast. That is handled by wholesale central bank digital currencies, or CBDCs, allowing central banks to settle funds directly without corresponding banking networks. Combining instant data verification with direct digital currency settlement means businesses no longer need to park trillions of dollars in pre-funded accounts. That capital is finally free to move. For the Gulf Cooperation Council, automating supply chains serves a much larger strategic objective. They're building the infrastructure for systemic financial independence. The GCC is solving two structural vulnerabilities at once. They are bypassing reliance on external Western financial infrastructure, and they are replacing a patchwork of conflicting global halal standards with an integrated system. Through initiatives like the Global Halal Hub, these nations are reconciling disparate national rules into one unified digital framework that functions across all jurisdictions. Sovereign wealth funds are heavily financing this architecture. Saudi Arabia's Public Investment Fund is acting as a primary architect, designing the base layers of this new digital trade network. Alongside them, Abu Dhabi's Mubadala is driving structural investments in the UAE, ensuring both nations have the technical capacity to support massive cross-border capital flows. The economic stakes justify the investment. By 2030, the global halal economy is projected to reach $10.5 trillion, and the region controlling its digital infrastructure will dictate the terms of trade. Institutional promises and paper certificates are no longer enough to secure global commerce. The nations that will control the next era of trade are those hard-coding trust directly into the system itself.